Let's dial back down to the more immediate term now. We are approaching the festive season. We've also seen a fairly uncertain monsoon this year, where we've seen large parts of the country being inundated with floods, some parts of the country not seeing enough rain, and that has impacted food prices as well. Two questions on inflation, specifically as far as commodity inflation is concerned. What is the outlook? And two, what is the outlook in terms of demand at this point in time? Because it's a confusing picture. You talk to different companies and we're coming up with different points of view on where things stand. What is the ITC point of view on demand today?
Okay, as far as inflation is concerned, I think the worst is behind us. In fact, as we all know that India has managed it much better than the rest of the world. You know, pre-COVID, India would typically have a higher inflation than the other parts of the world. It's now a better situation that we are lower, but it's higher than what we would like it to be. But I think the worst is behind us. Inflation is coming down, though the cost of commodities remains much higher than what it was pre-COVID, but certainly inflation has come down. In the recent month, we did see some increase in inflation that was on account of certain commodities, you know, the perishables, where there was escalation in the prices. But I think that is behind us again, and it will come down to what it was prior to that. So inflation is all signs are the worst is behind us. It will moderate, but I will just say that, you know, we are all living in a very uncertain world because of this extreme weather events. So one has to be very watchful. But today all the signals are that it will only moderate. And with moderation of inflation, there is bound to be, and it's already happening, price corrections in the markets. So volumes will pick up. It is not like a on and off button. It's not linear. It's not that the moment you correct prices, the next day the volumes pick up. It's a process that happens because, you know, there is inventory in the pipeline and so on and so forth. So it takes time. So I do expect in the second half volume will be better. As far as we are concerned in terms of the trajectory, I think you've seen in the last few quarters that we've held on the growth rates quite well in the upper quartile. Even I would say our volumes have been better than you know, industry figures. I can't give you a number because there are so many categories for me to get into it, but generally have been better. And I think it's holding on. It's holding on well. And rural also, there are some certainly green shoots of pickup are there definitely.
So you are seeing green shoots as far as rural demand is concerned. You know, you said that you are hopeful of a pickup in volumes in the second half, and especially as we approach the festive season. You've done well on margins. Is there room now on the back of all the measures that you've taken and in terms of being able to leverage your competitiveness to do even better on margins? What's the aspiration as far as margins are concerned?
Yeah, here I can give you an aspiration. Yeah, so because we have called it out here. So if you look back, you know, from FY18 to 23, our margins in FMCG have expanded by 770 basis points. We had said that our aspiration is 100 basis points or so every year. And so far we have done better. And despite the fact that we had very severe inflation for some period of time. And going forward also, I think we are saying 80 or more like 100 basis points is what we would like to do year on year. Of course, I'm not saying it's going to be linear that way. It could be some years a little more, some years a little less, so that plus minus will happen. But an aggregate, if you look at a medium term, certainly around that 80 to 100 basis points, we should be able to do. And what is it that gives me the confidence? Because I think we have put the structural levers in place. And the structural levers, one, come from the portfolio, where we are premiumizing. And we are premiumizing what we have. And we are premiumizing by getting mega brands to address value-added adjacencies. We are premiumizing by democratizing premiumization. That requires some innovation in the supply chain, because small quantities you have to take to... You know, Bharat is premiumizing. So how do you... The servicing Bharat is a challenge. So that's where the innovation is required. So that's on the portfolio bit. Then on the back end, we are leveraging digital to optimize everything, from how we buy to how we spend to how we deliver. So all of that is in place. I think our ICML story is starting to give us results. I think the huge red room to go with the economies of scale and scope, capacity utilization, We've also delayered operations very well in 2 units, that is in Kapurthala and Trichy with integrated logistics. That model has got proven. Now we are going to roll it out. We are getting closer to the market because of the footprint of our manufacturing facilities. The investments we are making in our facilities, besides giving us the right quality, are also improving productivity. So all of these measures, and of course as we scale up there is going to be a scale advantage. So I think we have levers in place for continued margin improvement in the short term and medium term. All the levers are well there, and they will unfold over a period of time. And as we go along, hopefully we will keep on adding more levers to it.
Well, speaking of adding more levers, I want to understand what now the strategy is likely to be as far as the D2C space is concerned, because you have dabbled in that, whether it's Mother Sparsh or yoga, bar and so on and so forth. Are you willing to take a bigger bite of that market, of that business?
So, we don't look at it as just merely an investment or an acquisition of D2C. What we invest behind is the idea and the consumer space. So Yoga Bar was a premium healthcare space, natural ingredient. That is the trend for the future. It's a trend that is accelerating. So we've invested because of the trend.
Yeah.
Ultimately, I don't think anything big is going to be created purely on a D2C model. It has to go omni-channel. There will be very, very few and far little niches that will remain purely as D2C. You see, e-commerce is growing, but it's still a small pie of the consumer.
Right.
And our idea would be to be present well on every platform from where the consumer buys. Right, so that's where D2C has a role to play.
Yeah.
But the investment is driven by more the theme and the idea and the opportunity that gives.
Right.
So and that's the value we bring onto the table.
Exactly.
Is to be able to make it omni-channel in future.
So what is the war chest, if there is one, potentially that you're looking at to be able to take some of these ideas and these trends and build them out and amplify them?
Well, we have been resourcing all our investments in the past, all the brands that we have built. We've built 25 mega brands at 29,000 crores consumer spend. So we have the resources. Resources is not an issue.
It's not a constraint, yes.
It's not a constraint. I think if at all the constraint is how creative and how well we can execute and how well we can prioritize. I think these are the areas really.
So speaking of prioritization, what is the prioritization going to be now as far as capital allocation is concerned?
So it's going to be, it's going to be more FMCG, and it's going to be more paper boards. Of course, agri is also going to get some bit of it because we are moving into value added. And then generally across businesses, you also have a capex for technology upgradation, replacement. So all of that will come in. So it's going to be FMCG, paper, the major chunk, followed by agri and our traditional business.
So on FMCG, a big milestone of 5,000 crores that you touched. Is that likely to be the sustainable rate? How much more do you believe you can improve on that?
I think the headroom to grow is tremendous. 5,000 is just, I would say, one milestone. And now we have to start working on the next milestone.
Which is what?
Could be, milestones will be in thousands, in 2,500, in 5,000. So it's a continuous.
Is 7 the next?
I'm not going to give any guidance, but I'm just saying that idea is to. There's plenty of headroom to go. If you look at with our per capita incomes, they're going to go up and double by 2030. And we have seen the S curve play out in many other economies, and I see no reason why it will not play out in India, and therefore the opportunity is huge. And we have also, been selecting our portfolio in a fashion where the opportunity to grow through penetration is huge. Our addressable market in our existing portfolio itself is, as analysts estimate, is about 5 lakh crores, the highest in the FMCG space. So headroom to grow is tremendous. And that's why, as I said earlier, it's all about insight, prioritization, and then great execution. So at a portfolio level also, there are 3 parts of our portfolio. The third part is really, really creating the growth drivers for the future. So we are really building the portfolio for today, tomorrow, and day after.
So speaking about the growth engines for the future, outside of the businesses that you're already in or the categories that you're already in, what are you prioritizing from a future perspective?
Well, as I said, you know,
any new adjacencies that you're likely to get into, any new trends that you're hoping to zero in on?
So one vector is, besides scaling up our big brands, one vector is value-added adjacencies out of existing brands. And that's an ongoing process. It's about inciting and then finding the prioritizing to execute. So if you look at Ashirwad in the last 12 to 18 months itself, we have gone into, it's become a big center of plate brand. Besan, vermicelli, and so on and so forth, right? It's gone into many, it was already there in salt and spices and ghee earlier, so it's gone into frozen breads, right? Sunfeast has gone into milkshakes. Right, so the adjacencies will be spotted, and where we have the right to win, we will get there. We are then scaling up categories like the frozen snacks, ITC Master Chefs. We are scaling up our beverages, the juices. We are scaling up our, natural floor cleaner like Nimail. At the same time, we are incubating categories like Dermafique. This is our skincare brand. We are incubating chocolates. So these will, at some point of time, after we have scaled up what we are scaling up now, or get to some reasonable size, and when we find we have the right, opportunity, we will start scaling up these other categories. So it's going to be an ongoing process.
Let me end then by asking you talked about the premiumization of Bharat. As far as the premiumization of Bharat is concerned, what's the big opportunity that you intend to focus on? If you can just lay out the broad landscape for us.
So we are going to focus a lot on FMCG. And in FMCG, the focus is actually we find the opportunity across, whether it's food, whether it's personal care, whether it's stationery, or whether it's agarbatti, right across.
Sanjeev Puri, always a pleasure. Appreciate you joining us here on CNBC-TV18. Thanks very much for your time, and we wish you the very best of luck.
Thank you, Shri. Always a pleasure.
Always a pleasure speaking with you. Well, that's it then on this edition of On the Record from all of us here from the JP Morgan India Investment Summit. Thanks very much for watching. We'll see you after this very short break.